everybody, it's Richard Reid with DirectLink Realty. I'm here to present the Ultimate Homebuyer's Blueprint. This is a guide for homebuyers themselves to help them understand the process that we need to walk through in order to get them from the idea of purchasing a house all the way through purchasing a house. And it serves as a guide to help them understand ahead of time what the steps in the process are, to give them a reference point to come back to as they get into the process, because they're not going to remember everything, as well as a guide to ask questions of their agent or their lender or the closing attorney, etc., as we go through the process of the home purchase. So the idea is to try to have a reference point where people can read kind of an overview ahead of time of what's going to happen in the entire process, and then in more detail read kind of section by section what phase they're in and maybe one or two phases ahead, so they know what's coming next and they're prepared to walk through the entire process. People understand that they're not missing things along the way, and to give them a solid reference point to come back to if they feel like there's something that's being missed, or if there's something that they're not confident about, they've got kind of a tangible document to come back to. So let's start by just looking at the entire process. So obviously it starts with the idea of wanting to purchase a home or to move out of a rental property into something that you're going to own yourself. And that can take many forms. It could be a condo, it could be a townhouse, it could be a single family home. You could be doing new construction that you're buying in a neighborhood from a builder, or you could be building, from dirt yourself. There's a lot of different ways to go about the process of finding the right property for you. Once you identify that you're looking for a property or that you're interested in making a purchase, the next best step is typically going to be to meet with a realtor, because the realtor is going to have the knowledge of the entire process and what options and elements are available to you along the way, as well as most of the tools that are going to help get you there. So rather than guessing or just searching on your own, people spend thousands of hours on national, MLS or just sites where they can search for homes themselves. And those are great tools. There's nothing wrong with them, but they're not that fantastic in terms of the ability to refine the search to things that truly are the key relevant elements for you. And they don't give you the insight that an agent's going to give you in terms of how to narrow things down so you're looking at what's most relevant. As an example, if you look at a search engine, and so I'm in Atlanta as a reference point. So if you look at, Atlanta 3-bedroom, 2-bath homes, there are going to be thousands of things that come up, because Atlanta end to end is close to 60 miles. You're not going to want to be in every part of Atlanta, but you don't understand, or you don't have the tools typically in those search engines to narrow the search in the way that's going to be most effective for you, but an agent can. And an agent will also help you uncover what the key elements are and key factors are in helping you work through what's most important, what are the must-haves versus the nice-to-haves in that process. The next component is going to be typically what kind of financing or what kind of financial vehicles are going to be a part of the purchase process. That could be an all-cash transaction. It could be a loan, with a down payment. It could be 100% financing. It could be, a whole kind of sort of myriad things in the that come into play, as well as allowing potentially gift funds to come from other sources and things of that nature. But there are a lot of rules and kind of potential gotchas along the way as you look at those different options. So it's really important to be working with somebody who understands what those are and who can inform you ahead of time and make sure you're set up for success. Also, it's important to note that in the market that we've been in for the last couple of years, you're doing the financing up front much more so than you were before. So while you're still typically going to have the loan processing during the time of the purchase of the transaction, for the most part, what we're really doing in that time period is the appraisal piece. the underwriting of the individuals themselves, we're typically doing before we ever get to an offer. And that's just to put you in a competitive advantage as you compete against other buyers, because most buyers do have some kind of financing that's a part of the process. And if you can do it up front, the way that we're describing, then you can have effectively a 0-day finance contingency, even though you're doing a loan, because you've already been underwritten. So there are tricks of the trade kind of along the way, as well as literally hundreds of different loan programs that are out there. So don't assume that there's one loan or one size fits all. Most people are not doing a 20% down, 30-year conventional fixed rate mortgage as we approach the market. There are lots of people putting less money down. There are some people putting more money down. There's plenty of cash buyers out there, but there's also plenty of people right now doing 0% down, even on non-VA programs. So don't assume that you know everything. I can tell you I've been doing this for about 20 years, and every 6 months, the rules change around financing in terms of what programs are out there, what's in favor, and what kind of options and opportunities exist. So it really will serve you to work with a realtor who understands the breadth of the programs that are out there and that has partnerships with lenders they can connect you with that are going to help you uncover the handful of programs that are most suited for your particular situation. Obviously, as you look at finding a real estate agent or a realtor or broker to work with, you want to look at not just can they get in the car and show me a home. You want to look at these factors that we've been talking about. Do they understand the neighborhoods? Can they help us understand and uncover what are the most important features to us? Do they understand what the financial products are and how to pair us with the right lender in the scenario? And that's going to really go kind of through the whole transaction. Do they have the right relationships to put us in touch with inspectors and contractors? And do they have a depth of knowledge that's going to allow them to really help us navigate the entire process with confidence, not just in what the current market is doing, but in all of the best practices that exist in the industry to make sure that you're protecting yourself in the best way possible. It's typically the most expensive financial transaction somebody's done up until this point in their life. And so it's important to get it right, not just in terms of what it is that you're going to live in and making sure that it's well suited for you and potentially for your family, but in understanding how it fits as a part of your financial portfolio and making sure that it's going to at least has the best opportunity to meet your financial expectations and to serve you financially as you move forward. That could be in terms of resale value when you go to move to the next property a few years down the road. It could be in building the first property in your investment portfolio. It could be in subdividing a property in order to offset some of the costs and house hack to some extent the purchase of the property, or understanding at least what options exist, both in terms of just the logistics of the floor plan in the house itself, but also in terms of the municipality that you're in and what options exist in terms of expanding a property, in terms of modifying a property, in terms of what can be subdivided for in terms of a legal address, in terms of utilities. All of those are complications and factors that come into play as we look at different options for rentability, and we look at how a property can serve you both short and long term. Even if you're not thinking about it as a rental property in terms of where you are setting out on your expectations game, it's always good to have 2 to 3 exit strategies on any property that we look at along the way, because you never know exactly what the financial market is going to be like in a couple of years, or what your job situation might be, or how your family might change. There are all kinds of different things that are external to our kind of expectation game that can be a part of the process or the reality that we have to deal with as we move forward. And so the better you position yourself up front and the more you think through what those things or scenarios might look like, the better position you're going to be down the road to make this the smart financial play. Then we get to the part where everybody thinks it starts, which is just hopping in the car and finding a property. And obviously this is important, but it's important to understand that you're not just looking at the property in that process. You're looking at the neighborhood. You're looking at the parks around, the grocery stores around, the coffee shop, whatever it is that you do on a day-to-day basis in order to enjoy your surroundings, not just the property you're living in, but your entire lifestyle, how that works for you, houses of worship, whatever the case may be. You need to make sure that all of those elements are looked at and reviewed as a part of the process of finding the right home for you. And your agent is going to be able to really help guide you a lot in that process because they've hopefully looked at hundreds or thousands of homes in the area and will have the ability to give you a much broader sense of the market. As we get through that process and identify 1 to maybe 3 or 4 houses that do meet your criteria, then it's a matter of understanding, what kind of offer we want to put together. How's it going to serve you as a part of your financial process? Because now we're kind of tying back to that financing from the beginning. What loan products and loan vehicles were you looking at in order to help you best position yourself in the process in the property financially? And each property might have a slightly different scenario. You might find one property that's more expensive but that doesn't need any renovation. You might find another property that you love the potential of, but it might need work done to it. You can, in many cases, roll those finance or those improvement costs into the loan, but you have to know that you're doing that up front. But kind of as we're making the offer and as the loan's being underwritten, because all of that has to be a part of the process. So looking at each property that does potentially make the cut with those eyes and really understanding what the total financial picture looks like now, so you can compare those apples to apples. And then we work on putting the offer together relative to how it's going to look to the seller. So it's important to understand as you go through the process, no matter how good or bad the market is, in order to come to terms on a property, you have to come to terms with the seller. Now, the agent's going to typically negotiate that for you, but there are a number of things that can happen in the process that effectively cost you no money or cost you a nominal amount of money, like understanding what closing date is important to the seller. Do they, are they trying to make a purchase on another home that's already under contract and where you can be flexible on the dates to some extent from your perspective, or understanding on your side, if you're getting out of a lease or whatever the case may be, making sure you're lining those dates up from a payment perspective so you're ideally not double paying. Looking at things like, is the seller downsizing, and might it be helpful if they left a couple of things behind in terms of maybe outdoor furniture or something of that nature. There are some little things like that you can incorporate in your offer along the way that allow the seller to have less friction, that don't add expense to you, that can help you get a better deal or help you be the winning deal as a part of that negotiation process. And so it's important as we enter the negotiation process for you to be working with a realtor or an agent who understands those nuances and who's willing to take the time to make the phone calls, to do the research, to understand what those elements are, because often those little tiny adjustments to an offer can make you the winning offer, and we are still in a market that does have often multiple bids that we're dealing with as a part of the process. Then, in most cases, we're dealing with some version of an inspection period. In our case, we're dealing with a due diligence period, which the buyer can cancel for any reason. But those periods, again, because we're in a multiple bid scenarios still for a lot of properties, those periods are very short. They're typically in the 3 to 7 day range. About 5 days is probably average right now. So that means you've got to be on top of it with getting an inspection done very quickly and having the opportunity to have some follow-up questions and some experts to help you dial in what comes back during an inspection, as well as a day or two to negotiate with the seller any items that come up during that process. We are in a situation where in a lot of cases we can still get the seller to address some stuff, but again, with multiple bids, there's a limited ability to get the seller to address aggressively the issues that come up during inspections. So it's important as we go to make the offer and as you look at the property initially to be looking as thoroughly as you can, so you have open eyes in terms of what it is that you're going into. Obviously, you're not going to uncover everything in the process because you're not typically climbing around the attic or the crawl space, but you want to know as much as you can before you make the offer so that you're educated and you're planning for, what's coming in terms of maintenance for the property. And then as we move beyond the inspection and negotiating those terms, the loan typically is being underwritten and the appraisal is being done. And then we move towards the closing. For the closing, obviously your financing comes into play in terms of bringing all that all together. You're going to either be in an escrow state or in an attorney state. We're in an attorney state, so all closings in Georgia take place with an attorney. And the attorney in that case is typically not representing the buyer or the seller. They're representing the lender who's issuing the loan. If there's no loan at all, then there's a very limited kind of positioning on the buy side, but it's basically an agnostic party to the transaction, just making sure that the title is clean, that the paperwork is properly filed, and that any lien associated with the closing is firmly attached to the property as the closing takes place. And then obviously we move towards the move-in process and making sure that you're getting all the utilities transitioned, that you've got the movers lined up, that all of those elements take place, as well as any repairs or maintenance that you want to do proactively as a part of that move-in process. Another thing I'll say is that it's also important to work with an agent or a realtor who's willing to work with you through the ownership process as well as through the purchase process. I work with all of my clients really kind of indefinitely as long as they're in the property, because you're going to have plumbing needs that come up 2 years down the road, or a roofing need 3 years down the road, or 5 years down the road there's going to need to be an electrician or something of that nature. And most homeowners aren't going to need enough work to have those kinds of resources at their disposal on kind of in their Rolodex kind of scenario. But we do that for our clients. We actually will provide references and contacts, handymen, and appropriate professionals for needs as they go along the way. There's a big variability in terms of cost and trust in those different industries and elements, and it's just a service that we provide in order to allow our buyers to have comfort that they've got a resource and a sounding board, not just for who to call, but also to kind of sort of talk through what it is they're planning to do. A lot of times we want to talk through with them if they're planning on improving something, a bathroom or a kitchen or something of that nature. We want to know how long they're planning to be in the property and what decisions they're making. And we want to help them understand how well that will position them in terms of getting that value back when they go to sell the property. Even if it's 2, 5, 7 years down the road, the decisions they make can be significant in terms of what kind of return they're going to get, on some multi-$1,000 or tens of $1,000 investments. We want to make sure that they're making smart decisions, or at least informed decisions. So if they're making a decision that's not going to position well in the market, that's fine, as long as they understand that and they are willing to take that risk or that to take on that cost themselves. We just want them to be well informed in the process. That's a really high level overview of kind of what's going to happen as you go through the home purchase process. Now we're going to dive in and look at things a little bit deeper. Okay, as we referenced in the overview, it's important to understand there are a number of things that probably are going to happen or should happen before you get in the car to go look at properties. And the first is to start to figure out who your agent is going to be. And in most cases, people are working with somebody either that they know or that was referred to them. But in a lot of cases, especially for first-time buyers, they're not aware of agents in the marketplace. It seems like once you own property, half the people end up being realtors. But in the beginning, there's a little bit of a hurdle in terms of kind of sort of getting into that world. So how to understand what an agent can do for you and what their qualifications are is going to be a really important part of the process. Most people in the real estate game are in it for a very short period of time. So it's important to understand most agents have been in the business for less than 5 years. About 80% of agents fail and leave the business within a 5-year window. So that means only about 20% of the people are surviving and going beyond that. As I said earlier, I've been doing this for about 20 years, so obviously a lot more than 5. And I've been in the top 10% and pretty much in the top 5%, often in the top 1 or 2% of the country in terms of production, volume, unit transactions, and things of that nature. I've sold several hundred homes. I've sold hundreds of millions of dollars of residential property. And so obviously I've got a lot of experience and exposure to what happens in all kinds of different facets of the real estate game. And if you're local to Atlanta, we'd love the opportunity to work with you. But if you're not, we want to set you up for success as well. So understand that it's important to ask the agent how long they've been in the business, what kind of transaction volume they're doing, or what kind of dollar volume they're doing. It depends a little bit on kind of what your scenario is as to which of those can be more important. Are they working on a team? Are they working by themselves? Is it going to be you or is it going to be them specifically working with you? Or are you going to get passed around to different members of a team? You want to understand kind of all of those dynamics because it's important to build depth of knowledge and history with the person who's going to help you through those different components that we talked about before. And the more exposure you have to somebody, the more they're going to understand what your needs and wants and desires are. So when you're looking at the market, you're going to want to talk to probably a handful of realtors. You're going to want to see who you connect with. In terms of, from a personality perspective, you're likely to spend a little bit of time with this person. So you're going to want it to be somebody you get along with. You're going to want it to be somebody who understands the financial implications of the properties or the homes as they would fit into your financial portfolio. You're going to want somebody who understands the mortgage vehicles that are out there and that has relationships with lenders. You're going to want somebody who has inspectors and handymen and contractors who can address issues that come up during an inspection. You're going to want somebody who knows closing attorneys or escrow agents and has the ability to facilitate that part of the transaction as well, all with ease. Because each element along the way is an opportunity for you to be better positioned, better informed, or to fall apart or become an issue in a transaction as we go through the process. So the more of those components and the more of that knowledge the agent has, the better, the more experience they have in those elements, and the stronger their team and their history is with those elements, the better they're going to be able to serve you as you move forward through the process. You know, like I said, again, we've been doing this for a long time, so our ability to address and to nuance whatever comes up is is about as good as it gets, really, because there's nothing comes up to everybody all of the time, but because we've been doing it for so long and because we have so many people that are a part of our team and our process, if something isn't already addressed on our team, there are people that we know or that our team knows that can fill any gaps very quickly and very confidently. So you want somebody who really is an advisor and a team player in terms of being able to work with you from that perspective. This really is not about just opening a door and getting you into a house. It's about a financial partner and an advocate who's going to serve you through the identification of a property, through the financing of a property, through the inspection and any maintenance and repairs of a property, through the closing and the closing attorney, financial or legal process, and really looks to facilitate all of those elements as your advocate. So think about that when you're interviewing somebody. Like I said, it's important that from a personality perspective, I think you do get along, but you need to be looking much deeper than that into their ability to serve your needs as we go forward into the marketplace. When you're selecting an agent, you may also want to look at blogs that they've produced, at videos that they have, out there on YouTube or on their website. You may want to look at any kind of positioning they've done in the neighborhood or on websites that they're putting forward in order to help the community or to help home buyers and sellers in a particular area. It's important to understand that when you're looking at sites like Zillow or Realtor.com or Homes.com, that what you're seeing there are people in most cases who are paying for positioning. Whoever pays the most is the one who's likely to get you as a lead in that home buying process. That may be somebody who just started working a month ago in the business. It may not be somebody who's going to be best positioned to serve you. And again, from a personality perspective and other things, it may not be the best fit. So while those sites can provide a service in terms of showing you people that are out there and people that are trying to get business in the area, just because they're showing up well on a site like that doesn't mean that they're a great agent. It just means that they're paying for positioning in most cases. Now, that's different than reading reviews and things of that nature. Those tend to be from people who have closed transactions. So if you're looking at reviews and that kind of experience or response from the community, then that's going to be a better indicator than just did they show up next to the property that I liked when I was looking at the pictures. So do a little bit of digging, and like I said, try to look at videos, look at blog postings, look at their website, look at kind of testimonials and reviews. There are a variety of different things that you're going to want to look at to give you a better overall picture. It's better not to be fooled by just the first person that you see next to a property on a paid advertising site. Once you think that you've selected a group of agents to talk to, it's important to know what it is that you're going to ask them. And we've already talked a little bit about the fact that you're going to want to ask them about how long they've been doing this. Are they doing any kind of volume? Are they selling on a regular basis? Is this what they're doing full-time or part-time? That's going to indicate both how available they are to you as well as how much knowledge they're likely to have. Because if you're doing it part-time, then you're not nearly as likely to have the kind of exposure and experience that's going to be needed to serve you well. The question you might want to ask an agent is, do they work with buyers or sellers or both? Some do one or the other. Some are parts of teams where they'll pass you off to another team member for one function or another. So you want to know whether they're going to be able to serve your entire need or whether they're going to pair you with somebody else in order to get the entire process represented. And then you're going to want to ask them about like real estate news. What's the local market doing in terms of appreciation? What are the trends? What areas are doing better than others? In particular, if you're looking at multiple areas that might work for you, conceptually, what are their takes and thoughts on that? What's their exposure to that from a sales history perspective? Have they sold in that area before? Did they know it? Again, if you're in an area like Atlanta, the metro area, when you look at it on the news, is 28 counties. Nobody knows all 28 counties well. So you're going to want to understand what their exposure and their approach to the area you're actually interested in is going to be. As we've talked about before, when you're interviewing agents, you definitely want to talk about what kind of relationships they have with vendors who are going to be important in the process. Inspectors, handymen, contractors, electricians, plumbers, closing attorneys, engineers, all of these people come into play as a part of the home buying process in addition to lenders with different unique programs. So you want to know how deep their kind of base of resources is in terms of being able to help you and position you for success with whatever may come along the way. Another thing that's going to help you understand their depth kind of knowledge and expertise and exposure in the industry is what kind of publications or what kind of information they've put out into the market. Have they done movies or videos that they've put out there? Have they done postings for YouTube? Have they done postings on sites like Zillow and Realtor.com as contributory material? Have they published a book? Have they done a variety of different things that are going to demonstrate their depth of experience and exposure in the market and their willingness to give back based on that information? Okay, now that we have an agent selected, you're typically going to sign a document with them. In my opinion, you want to do this. There are states that require this and states that don't. If you don't sign a document with a buyer's agent, you're typically going to be working with them as a transaction broker or a transaction agent, where they can answer questions for you factually and facilitate the process, but they're not really tied to you in terms of working on your behalf or for your best interests. There's a different level of a relationship that exists in that non-documented scenario for the most part. And there is an ability to document that transaction process also, but typically if you're going to work with somebody at a more significant level, you're going to be working with them as your buyer's agent. They're going to formally represent you as a part of the process. They're going to advocate for you, and there'll be a legal document that shows that. Now, the agents are not attorneys. They're not going to be allowed to create that document from scratch. They typically are working with forms done by the Association of Realtors or by the MLS or by some kind of group of attorneys that are facilitating documents for that area. They could be unique, drawn up by a specific attorney, but in most cases, you're going to be working with a form. In our case, in Atlanta, we work off of documents typically done by the Georgia Association of Realtors. So they're typically the same document throughout the state. So, but in that, it's going to specify and clarify the roles and responsibilities of the agent, the roles and responsibility of the buyer, and it creates that formal documentation so that there's clarity around who's doing what and how that process works. It also clarifies compensation, so you understand how the buyer's agent is getting paid and by whom, and there's kind of multiple factors that can be involved there, but all of that gets clarified and documented up front. So there's no mystery as you go through the process. There's documentation in that document, and then I think in most cases now, certainly in our area, there's documentation as you go kind of property by property, what the sellers offer for compensation through their listing broker is as well, so you can see how that does and doesn't line up. And you might, and also there'd be clarity on how any difference gets addressed. It's important to understand all of that up front because you don't want to be negotiating commission and the property at the same time. And in that scenario, you're creating a relationship where the agent effectively is negotiating against themselves or against you as a part of the process. And so you want all of that clearly defined up front and documented up front before you ever get in the car and go look at property. So there's no ambiguity between you and the agent about, or you and the broker about what that process is going to look like financially in terms of the buyer's agent compensation. Then there can be discussion, and there often is and should be discussion about any deficiency coverage and contracts as you look at positioning offers going forward. Once you've got the agent selected, they're going to sit down with you and work through, and this can be done by Zoom, it can be done in person, it can be done a lot of different ways. But you want to understand what type of property is that you're going after, what geographies you're potentially going after, or education systems you're going after, in order to start to narrow down the list. Then we look at the more traditional features that people think of, 3 bedrooms and 2 baths, or has to have a deck, or needs a fireplace, or open floor plan, or basement, half acre lot, quarter acre lot. All of those different elements can come into play as you start to narrow down what it is that might meet your needs or your criteria. And then, again, a good agent is going to help you understand what are the must-haves and then what are the nice-to-haves. Because often buyers' expectations in terms of what they can get and the area that they want don't necessarily also conform to the price that they want to pay or the monthly payment that they want to pay. And understanding what's most important in that priority list is going to help shape whether you're adjusting the needs that you have as a part of the as property parameters when you're going through the search process, or whether you're adjusting the geography in order to get to the financial need that you want, or whether you're adjusting the financial expectation in order to get the neighborhood and the property that you want. Those all three kind of sort of move in tandem as a part of the process, and it's important that you work with an agent who understands how to help nuance that in order to help you end up with the best property in the best neighborhood at the best price for what your entire kind of holistic goal is. As we stated before, once you identify the properties and the neighborhoods that you think you're after, you want to make sure that you're interviewing not just the home as in terms of going to look at homes, but the neighborhood and the community itself. You want to go visit the grocery stores, the coffee shops, whatever it is that you do on a regular basis. If you're going to church or synagogue or mosque or something that's important to you from a religious perspective, you want to make sure you're looking at those elements as well, so that you're well positioned to understand the entire picture of how that property is going to live for you on a day-to-day basis. Now that we have at least a virtual concept of what it is that we think we might be going after, it's important to start to uncover the financial elements that are going to come into play. And that's going to be identifying the right mortgage lender, the amount of money that's going to be required as a down payment, what kind of closing costs are going to come into play, if there are gift or non-gift funds that are a part of the process, what's aged in the bank account in terms of being documentable and usable from a down payment perspective, and all the different elements that are requirements for the various loan types. As I said earlier in the overview, it's important to understand that there are literally hundreds of loan programs out there. There is way more than one type of mortgage or two types of mortgage. So don't limit yourself to your preconceived notion of what a mortgage or what a down payment or what a financial outlook has to look like when you're going through the home buying process. Talk to your agent and talk to the lenders they're connecting you with, as well as potentially to other lenders out there in the market, to understand what all of the options and all of the opportunities before you are. What is best for you in terms of financial program may very well be different from what you think going into the process. So it's important to understand and to explore that. It's also important to ask a lot of questions as you go through that process, because it is easy for anybody in the business to answer and or act in the most kind of sort of default way, which is to say, here's a 20% down, 30-year fixed rate mortgage. That's what the market conceptually believes exists. And so it's easy to kind of sort of just go through the process that way. But you might be better served by putting slightly less money down or slightly more money down, depending on a variety of factors. You might be better off putting less money down and keeping money on the side for improvements. Or you might be better off doing a higher down payment and then financing improvements. There's different scenarios that are going to be important for every single unique financial situation. Every property is unique, and every person's financial outlook and process or outlook and parameters are unique. So we want to be looking at all of those elements as we work for the best financial vehicle and the best financial representative to help you through the mortgage process. We have a couple of different lenders that we work with in order to have a broad array and range of programs, and they do an excellent job for us. But even after 20 years in the business, we're constantly adapting and adjusting who it is that we work with and what that process is, because not every bank has every program, and not every mortgage broker is able to work with every different kind of program that's out there. And it's important for us to be able to offer the breadth of what's available in the market to our customers to make sure that they have all the opportunity to succeed. As we look at the mortgage process, it's also important for people to understand that financially, as we go through the process, you're typically going to make an earnest money or escrow deposit at the time an offer is made, or certainly within a couple of days of that. And then you're typically going to pay for the inspection out of your pocket. You're going to pay for the appraisal out of your pocket. Any follow-up kind of specialists like engineers you're going to pay for out of pocket, as well as a credit application probably, all before we ever get to the closing table. So all of that money is going to come out or be due from you around the time of the offer. Then your down payment or the balance of funds due is going to be at the closing table typically, and you'll typically wire that 1 or 2 days before the closing just to make sure that all of that clears and is in good position before we actually sign documents. And then the balance of the funds would be coming from the lender or from the mortgage at the time of the closing. And those are usually wired in the same day or maybe the day before, but the lender's going to obviously handle that part. So financially, the bulk of the money is not going to be due from you until the closing itself, but you will have that handful of items. You'll have the earnest or escrow money, the inspection, any kind of specialist follow from a like an engineer or plumber, electrician, roofer, that kind of stuff, as well as appraisal and credit application fees. Typically, will all be in advance. So we just like for people to know and have a reasonable expectation of when those funds are going to take place. And when you're working with your agent and or with your lender, both of them should be able to give you estimates of what those types of fees and what those numbers might look like in terms of your area, your geography, the type of property you're looking at, and the types of loans that you're doing. I just want to highlight again, there are lots of different types of loans out there. As I said earlier, there's hundreds of programs. The most common kind of sort of parameters are going to be around a conventional loan where you can do, in most cases, as little as 3% down. Different intervals typically be 3%, 5%, 10%, or 20% or more down. But right now in the marketplace, we're in the beginning of 2024, there are federal programs right now that allow buyers based on either geography or income, or in some cases both, to qualify for as little as 0% down. And that's not a VA loan. So again, don't cheat yourself out of the opportunity of a unique financial program. They do change frequently in the marketplace, so you want to make sure that you're asking your agent and your lender, what's available right now, so that if something like that might be best for you. Typically, when you're dealing with conventional mortgages at each interval, so 0%, 3%, 5%, 10%, 20%, each reduction from 20% down is going to cost you a little bit in terms of the mortgage. Each reduction from 20% is typically going to cost you a little bit in terms of the interest rate, and usually it's as well as it's going to cost you some private mortgage insurance money. But it's also important to understand on the mortgage insurance that there are options for the lender or for you to prepay those premiums, and often if you prepay it, it's at a significant discount, as much as 50% or more in some cases, I think, from what it would cost if you're paying it monthly just baked into the mortgage. So make sure you're exploring those options as well. It's also possible still in the marketplace, and this was popular before the financial crisis, then it became unpopular, and now it's back into semi-favor. It's possible to do a first and a second mortgage, so you can do an 80% first mortgage, and then you kind of sort of pick the percentage of the second mortgage. And there are varying tolerances of that. Those programs change fairly significantly in terms of interest rate and in terms of what percentages they'll go to on even a daily, if not monthly basis, based on kind of the tolerances in the marketplace, because the people issuing them are trying to keep their portfolio at a certain risk factor level, and so they'll adjust availability and rates accordingly in order to keep themselves in line from that perspective. We're ready to look at homes. I know it seems like it's been a long time to get here, but now you've got kind of some context for what the process is going to be. You understand some of the elements that are going to come up along the way. You understand at least some of the key team players that are going to be a part of your process. You've identified who your agent is. You've probably at this point at least talked about a couple of different loan types. You may have already selected a lender at this point. And now we're ready to start to look at properties that are going to align with your expectations in terms of how many, things like characteristics like bedrooms and bathrooms, but also neighborhoods that are important to you, schools or places of worship that are important to you, overall lifestyle, as well as financially aligning with your goals and your expectations as we enter the marketplace. Looking at homes is different than what a lot of people expect, especially if they've just kind of watched like somebody lead them through a house on a television program. The way I tend to show a property is very organic. I tend to let everybody go their own way. So let's say that there are that it's a couple that I'm working with, and so there are two of them that are looking at a property, and then I'm the only other person with them. So there's three of us looking at the home. I tend, if it's just one property and I can be there ahead of time and make sure everything is on in terms of lights and doors open and that kind of stuff, I certainly do that. Sometimes you're going to multiple properties together and that can't always be done ahead of time. But basically, I'm going to go through and open everything up and make sure all the lights and everything is on. And each of us is going to go through the property on our own. Often one person will go toward the bedrooms first, another person will go towards the kitchen or the study first, or whatever the case may be. You never know who's going to really go where, but people tend to gravitate to what's most important to them and to their biggest kind of excitement factors as they go through a property. So it's helpful to let each person go on their own. As an agent, it gives me a lot of insight into what features are most important to them, but it also helps me understand, sometimes people are talkative verbally and they're not talkative, and sometimes other people are not talkative, but as you go through the property, even if somebody's not talking a lot, their body language will tell you their kind of order of going through things and their reaction to things physically as well as verbally will help me as an agent and us as a team understand the other person and what's significant to them. Once everybody goes through the entire property, then we typically regroup while we're still there, often in the kitchen, and talk through what did each person like, what did each person dislike, are there any surprises in terms of positives or negatives, did anything rule a property out completely, and what was that, and then also at that point, I'm typically going to talk them through what I saw. So it's important for me to hear from each person who's potentially buying the property what's important to them. It's also important for them to hear from each other because often they're not on the same page in terms of what their priorities are. And so we've got to find a property that's going to meet everybody's expectations. But also, I'm looking at the property differently than they are. I'm not planning to live on the property. So I'm not looking at it with an emotional attachment or engagement typically. I'm looking at things like, what's the condition of the roof? Are there any water leaks? Were there any modifications made to the property over time, and how well or poorly might those have been done? Are there maintenance items that are significant that are likely to come up in the near term? I want to understand, as much as I can as I go through that process, what's likely to come up as gotchas early on in the process, or things that I want to make sure we point out to a home inspector, or that we identify a specialist to come and look at a particular thing if it's something unusual. Because all of those things that I can talk about and we can learn and we can discover up front help shape offering on the property correctly, as well as helping us understand what other team members need to come to play in order to make this property a success if it's something they decide that they want to move forward with it. And that's kind of how we typically are going to work through each property as we go along the way. And then in most cases, people are not going to be, often they're not going to want to look at more than 3 to 5 properties in a day. But in reality, most people can't look at more than 3 to 5 properties and still retain what it is they've looked at. It just starts to run together in your head. So in order to set yourself up for success, unless there's a real limitation in terms of like flying into town to buy a property over a weekend and then flying back out, you're typically not going to want to look at more than 3 to 5 homes in a particular sitting in order to help you position yourself to be able to remember the properties and kind of make notes and really understand and remember what it is that you've looked at. In most cases, I'm always going to recommend that somebody. In most cases, I'm going to recommend that somebody look at least 3 properties before they make an offer. Certainly before they would close on an offer. But obviously everybody's situation is different and everybody gets to make their own call. But if you're looking within a well-defined area and it's a tight geography and you look at least 3 homes, you start to get a sense of what the market is. And that's all I really want to do is help them anchor the data that I'm going to send them as a part of the process so that they have some real-world exposure and experience in translating some of those photos to reality and understanding how 2 or 3 of the neighborhoods compare with each other so that they're making an informed decision. Most people are not going to look at more than 5 to 10 homes before they're going to make an offer or make a purchase. 15 is kind of the high end unless there's an extraordinary circumstance. And we have been in some extraordinary circumstances in a couple of, or certainly in my career, where people were just getting outbid on property after property. So we had to pick more properties or had to go see more properties because it wasn't just a matter of finding a property, it was a matter of winning a bid and positioning against property where they could financially succeed if they were competing against all cash scenarios or whatever the case may be. So there are exceptions to every rule, but typically 3 to 5 is a good place to start in terms of looking at property. A minimum of 3 to have some context. Anywhere between 3 and 10 is pretty appropriate during the buying process. At 15, we start to enter some kind of exceptional space typically, but again, each market's a little bit different. So work with your agent to understand what the expectations are around that, what you should be planning for, and just so you're psychologically set up for success, because different people start to play different financial or psychological games with themselves in terms of how the process is going or not. The more you know about what the expectations should be going in, the more you can react appropriately with what the marketplace is performing to at the time. Once we understand what property we think it is that we want to make an offer on, then it's important to understand and to test its valuation and to test the community, the neighborhood, and to make sure that all of the different things are going to perform against your expectations. As we go through that process, in my case, I'm typically going to give you probably 5 different reports of valuation from a variety of different databases and positioned in different ways so that you can, again, from a data perspective, just like from a property perspective, orient yourself in terms of what the kind of financials of the market are. And then I'm going to provide a specific report that is manually adjusted by me, similar to how an appraiser would adjust a property, but I'm not a licensed appraiser. Most real estate agents are not. And so it's called a broker price opinion or competitive market analysis, depending on your kind of nomenclature. But it's effectively a process where I'm going through and hand adjusting the comparable sales around against the actual condition of the property that we've walked through that we like, that we want to make an offer on. And I do that in order to test whether the agent's listing price was correct, so I know how it's positioned in the marketplace, as well as understanding how it's likely to appraise, because an appraisal is an important part of the financial process, and we want as little risk around that as we can have. Also, if we're in a competitive market and we're having to make offers either above list price or we're having to cover appraisal deficiencies with cash, we want to know what those gaps may or may not may be likely to be, and make sure that that works financially for the buyer as a part of the process. Again, we're just looking to mitigate as many mysteries up front as we can, and to inform how we position the offer as we go into the negotiation process. This is also when we look for things like, is the property in a floodplain, and we would scrutinize the disclosure statement to understand if there were any kind of hidden things that we weren't able to see but that the seller knew about and disclosed. We would want to make sure we're taking all of those into account as we prepare the offer in that process. And again, while all of that documentation process is going on, we want the buyer to be looking at the grocery stores and the coffee shops and the neighborhoods and getting a sense of, is the community going to live up to their expectations, as well as the property, the house, or the townhome or condo itself. Finally, as we're putting the offer together, we're looking at a variety of different elements. So everybody thinks of the price, and obviously that's one component of it. Another element, and this will vary to some extent by your area. In our area, it's often common for the seller to pay portion or all of the buyer's closing costs. And that depends obviously on how the market's doing as well. The more competitive the market, the less true that will be, but it can be an important part of understanding financially how much cash is going to be required to close and how you might want to position yourself for success. Offering a higher purchase price or a list price purchase price and getting the seller to cover closing costs will minimize the buyer's out-of-pocket expenses at the closing table. So that can help in terms of affordability or in terms of financial exposure, at least in the very beginning. Again, you want to understand what kind of earnest money is required or is common in the area, and how that positions you relative to other offers that may be in play. You want to look at the closing date. How many days out is that going to be? How long does that give you to get your funds together and to make sure that everything is documented appropriately for the lender, as well as understanding how that's going to play relative to any lease expiration or moving date that you might have, and when the first mortgage payment is going to be, so that you know that you're going to be setting yourself up for success there as well. In most cases, rent is paid in advance. So your January 1 rent would be paid, or your January rent would be paid by January 1, whereas mortgage payments are paid in arrears. So your January mortgage payment is actually paid February 1. So you kind of sort of get to skip a month in terms of the way that those two elements are set up if you're moving from a rental to a purchase. And that, again, might help you with either the closing costs or with understanding what your total total cash exposure is going to be as a part of the purchase process. But what we for sure don't want is for you to be surprised with when your first mortgage payment is going to be. Also, if you're closing earlier or in the middle of the month, then you're prepaying interest from then until the end of the month at the closing itself. So because those would typically be paid in arrears, the gap is in order to allow the billing or the mortgage company to be able to set up the billing on their end, and for you to be able to have time to get your payment set up and so on and so forth. So they're not losing money by letting you close earlier in the month. They're just collecting the money at the closing table and you're prepaying it. But again, it's important to understand those elements as a part of your process. Knowing what the due diligence or inspection period is, and understanding what your opportunities are as a result of that. In some cases, you may only be able to ask for repairs based on what the inspection items are. In other cases, you might be able to ask for cash or inspection items to be repaired or a combination thereof. Some cases it may be a purchase price reduction. In some cases you can walk away completely, and in some cases, if you do, you're going to lose your earnest money. So understanding how all of those different factors are in play in your area and in your offer is important as you go through that process. And then you also want to understand all of the contingencies that are in play during the offer. So the inspection period or the due diligence period is typically the first one that people think about, but there's usually also running concurrently a financial contingency period as well as an appraisal contingency period. And depending on the type of loan, those may be wrapped together and they may be separate, but they're both going to be typically running concurrently with that due diligence or inspection period. You want to know at each point what your options are should something arise as an issue relative to that contingency. What happens if too many things come up during the inspection? What happens if the finance doesn't come back clean? What happens if the appraisal is short? And how do you address and deal with all of those elements? You want to be talking through those in depth with your agent as you put the offer together so that you're positioned for success as we move through the process and so that you understand how to address concerns as they arise. There is no such thing as a perfect house, and there is no such thing as a perfect transaction in terms of everything working according to everybody's expectations at every point. What makes a successful agent and transaction and process is understanding how to deal with the bumps and the surprises and the gotchas as you go through the process and being able to work through them to get you to a successful place. So you want a team that's experienced and that has the ability and the resources to address those elements as they occur. But don't be surprised when something happens in the process. It is very normal for things to come up as a part of the inspection or the financing, etc., as you move through this process. And then if you're dealing with multiple offers, there's a whole separate set of strategies that come into play in order to make sure that you're positioning yourself in the very best way. And this is going to be a scenario where you're talking to the listing agent, your agent talking to the listing agent, and understanding how many offers are in play, what the deadlines are, what's important to the seller in terms of date or terms, and just every advantage you can get in that scenario is going to help you be better positioned to succeed and to win. Not everybody is capable of winning every transaction. Even if you understand what it's going to take to win, that doesn't mean you can perform to that. As an example, let's say it's a $500,000 house and the winning bid is likely to be $560,000 all cash closing in 10 days. Well, if you can't afford to close with all cash in 10 days, then you're not likely to be able to win that bid, even if you understand that that's what the market's going to demand. So you want somebody working with you and on your behalf who understands the market, who can help you understand what those scenarios are likely to be. They're not going to be clairvoyant. They're not going to see everything that's going on in the market, but they're going to be used to the types of transactions and offers and positioning that's out there. And they're going to be aware of tips and tricks for how to position yourself as effectively as you can in order to make yourself look as good against that kind of an all-cash offer as you can. Like we talked about earlier in the overview, if you're completely underwritten from a finance perspective and you can do a 0-day finance contingency, or if you can do a 3-day appraisal contingency instead of a 12-day appraisal contingency, all of those kinds of things are going to come into play to help you be set up for success as opposed to trying to play catch up, kind of at the back end of that. All right, now that we're under contract, it's time to dig in and really go to town on uncovering any issues with the property. The first thing that we're going to want to do is get an inspection scheduled. And there are a host of different kinds of inspections that can and potentially should be done at a property, given your geography and given the type of home it is and the type of construction that it is. So the most basic is just going to be a typical home inspection, and that's going to cover most things on the exterior and the interior of the home. It's going to only cover things that are visible. So if you've gotten kind of sort of lost in HGTV and some of the things where they cut into walls in order to discover stuff and other things of that nature, that is not what a home inspection typically is. It's an observational inspection, which means they're not going to move things around or cut things open in order to see what's going on. They're going to the best of their ability, observe what's going on based on what kind of access they have with somebody. The house may be empty. It may be somebody living in it. They're going to have different amounts of access. They're not going to move a dresser out in order to see behind it, and things of that nature. So be realistic about what the expectation of the inspector is. But that's not going to cover everything, and you want to, and it's certainly not going to cover everything in detail. And so you may want to do follow-up or more in-depth inspections around a handful of things. And here's a couple of them just to throw out there. If the roof doesn't look like it's in good shape, or if that's a concern of yours, you might want to have a roofing company look at the property separately. If you are in an area with radon or where radon is an issue, you might want to have a radon inspection. Please note that typically takes 48 hours in order for the machine to be on the property. And then it's got to come back and be read and etc. So you're going to need at least a 2 to 3 day window for a radon inspection to be able to get that reading back and know what kind of condition you're in. In Georgia, you want a termite inspection in almost every case. If not a termite and then like a pest and rodent inspection. It's not uncommon for things like squirrels to burrow into attics or to get into crawl spaces, or we have a crazy number of termites in the state of Georgia. So if the property is not on a termite bond, if there's not a recent termite inspection that you've got access to, and even if there is in a lot of cases, you're going to want to do that as an inspection option. And most inspectors are going to indicate things like average condition of something relative to average life expectancy, like an HVAC system, an air conditioner or heating system. Typically they're going to say those are designed to last 10 to 12 years, maybe 12 to 15 in rare cases, but in most cases they're going to kind of sort of give you that parameter. And if there's not something obvious going on in that, they're going to recommend that the system be serviced as a part of the kind of your moving process or your investigatory process. So you may want to just preemptively have an HVAC company coming out if that's important to you. And again, if that's something that you can tell as you're looking at the property that's an older unit or that you want to be covered on as a part of the process. Those are all different pieces that might come into play. And then if there are discoveries along the way of moisture or water, then you might want to have a mold inspection. You might want to have a waterproofing inspection of something like a crawl space or a basement. And the other thing that might come into play, in particular with older homes, if you're on a crawl space versus a concrete foundation, then you might need additional structural supports that would come typically from a contractor or from an actual engineer if you need somebody to specify positioning and timing, or in positioning and type of material for the structural supports. So all of those are different kinds of inspections or team members that can come into play as a part of the process, and it's important to have those resources available. In particular, if you're working in a short time frame, you want to be able to get them quickly, and you want to have everybody lined up so that you can meet the timelines that are set forth in the contract. Once you've had all of those people go out and you've gotten the reports back and the data back, then the agent that you're working with is going to help you negotiate either repairs or dollar compensation in terms of closing costs or in terms of purchase price with the seller in order to address whatever your concerns are. And again, the ability to do that is going to be predicated on the competitiveness of the market, the number of offers that are out there, etc. So just because something comes up doesn't mean that a seller is going to cover it. And it's also important to understand that in most cases, the reality in the market is the expectation is that a seller will address something that is broken if it is not disclosed. And they're not typically going to address something that is, as an example, you'll see often in an inspection report, near the end of its useful life. You might see because you might have an HVAC system that's 10 years old or 11 years old. It may be working perfectly fine at this time, but it may be near the end of what the manufacturer says the expected life is. If it's not broken and it's working properly, the seller's not typically going to just pay to replace or offer compensation to replace something, especially something that you're going to get the enjoyment of going forward. And they're not going to get any enjoyment of, obviously, moving out of the property. So it's important to go in with reasonable expectations. If it's broken, in particular if it's broken and it was undiscoverable at the time of viewing the home. So again, if there's a hole in the wall that was there when you looked at the house, you should have accounted for that when you made the offer. If there is a hole in the wall that was behind, a dresser, and you didn't see that when you were looking at the property, and you then saw, or the inspector saw it as they were, looking for an outlet or something, and they came across it, then that is something you would expect them to potentially address. Again, things that are like in an attic or in a crawl space that were not obvious because you weren't really looking at the house that way when you did the initial viewing. Those are the types of things that we're looking typically to address during the home inspection process. Things that are in the electrical panel box or in the pipes, associated with the plumbing, etc. So again, go in with reasonable expectations. Talk to your agent about what's customary. Look at the competitiveness of the marketplace. Sometimes you can get the seller to cover way more than you might expect. Sometimes they're going to cover way less than you might expect. But it's important to understand contextually how that looks relative to what the market performance typically is. Now that we've got the inspection done, everything really is in the mortgage and finance process as we move towards the closing. The closing attorney is going to deal with things like the title and making sure that the title is clean for the property so that it gets transferred to you free and unencumbered from any loans or liens or title cloud issues as a part of their process. The lender is now going to be underwriting, depending on whether you did the underwriting up front, they're going to make sure that you're fully underwritten and they're going to underwrite the property, right? So there's really two different pieces that go along in parallel for the lender because they're securing the property as their collateral. So they want to know that you're capable of performing against the loan for making the payments, but they also want to know that the property is likely to protect them should they have to foreclose and take the property as compensation for your default on the loan. When they're looking at the property from that perspective, they're going to look at a number of elements, and there's a couple of surprises in there. Number one, they're going to look at the appraisal, right, as a part of it. That's their biggest piece, and that's where the appraiser is certifying to them the value of the property relative to the purchase price and to the contract and to the loan. The second piece that's going to be happening is they're going to be looking at things like flood insurance or floodplain indicators from FEMA, so that they'll determine whether the property is or is not in a floodplain and whether they do or do not require you to carry flood insurance as a part of the protection of the property and of the loan as a condition of getting the loan. They're also going to look at what's called a clue report, which is basically the lender's not going to look at the clue report, but your insurance company will look at the clue report, and that's basically a claim history of the property. So when you go to get homeowners insurance, and the lender will require that as a part of the process, you're going to have to give them a binder from the insurance company. But as that process is taking place, when the insurance company is quoting you, they're looking at have there or have there not been claims against the property in the past, and what kind are they? Were they, was it water damage? Was it fire damage, etc.? So all of that information comes to light as a part of that process. And And then as we get towards the end of the mortgage process, they're going to send you kind of your final closing disclosure. That's going to happen at least 3 days before the closing. You're going to sign off on that saying that you've gotten all the appropriate information. You're going to be wiring your funds and setting up for the closing itself. And you're also at this point going to be working on your move from a logistics perspective. Is the moving company set up? Do you know what day you're planning to move? Do you have cleaners lined up if you want the property cleaned thoroughly inside and out before you make a move? Are you going to paint or redo floors before you move? Are all of those people lined up? And are the utilities set up for transfer? And remember, even if you're going to do work in the property before you move, so you're not planning on moving day one, if your workers need access to things like water and power, you're going to have to turn that on, even if you're not physically moving for 30 days while all of the work's being done. So make sure you're logistically thinking through all of those elements in order to set you up for success. Part of the process, in our cases, we'll give you a checklist for a lot of those items that you're typically going to want to work through. But I think many people will be able to give you those kinds of guides. Again, as we work or move into the final stretch, you're going to want to go through that closing disclosure. The lender's typically going to walk through that with you line by line, answer any questions that you have. There will actually be 2 different documents that are used at closing around the finances. One is the formal closing disclosure that the government dictates in terms of the form itself. And typically the second statement is an ALTA statement. It's a modern version of what used to be the HUD-1, where both the buyer and the seller side formally show up on one document. So you can see the entire process balance on one page or on front and back typically. But side by side, you can see how the credits and the debits line up for the buyer and the seller as you move through the entire transaction. And that's easier for the agents and the closing attorneys and to work through in terms of making sure that everything is accounted for properly, even though it's a more condensed representation than what the government form is that you'll have signed off on before closing and again at closing. When you are coming to the closing, you're going to want to have wired your funds in advance. Every state has slightly different rules, but in Georgia, you pretty much have to, other than a very nominal amount, you pretty much have to wire everything prior to arriving at closing. Cashier's checks are not accepted in most cases. Personal checks are not accepted in most cases. And most attorneys don't want cash. If you're planning to bring cash for any portion of it, you'd want to make sure that discussion had been had in advance as well, because that would have to be, they're going to have to account for that and document that as a part of the process as well. You're also going to need your identification. In most cases, you only need one photo ID, but it's helpful to bring 2 forms of identification. Some lenders and some loans do require a second form of identification. Sometimes it does, and sometimes it doesn't have to be a picture ID, but some kind of additional documentation around your identity. Again, the settlement statement is going to be the governing document, and you're going to have received the government version of that ahead of time. You may or may not have received the ALTA ahead of time. Typically, your agent will have reviewed that ahead of time. And so that part of the initial function of the closing should be kind of repetitive in terms of you should have already seen most of that information. But the closing attorney will walk through all of those items step by step. If you're in an attorney state, if you're in an escrow state, it's typically just going to be a notary public that's making sure that you sign off on things, and they're not really going to explain them. Funds required to close, again, ideally 24 to 48 hours ahead of time are getting wired to the closing attorney. It's not impossible for things to be sent the same day, but every bank is a little bit different in terms of how fast they process wires and when they show up, and the attorney is not going to, or the escrow agent, neither is going to fully close the deal until all of the funds have entered the escrow account and can be settled simultaneously. All right. At the closing, again, we've got to bring that identification, and we're going to hopefully have reviewed that settlement statement or at least the closing disclosure ahead of time. The attorney or the escrow agent is going to present those documents first, typically, and then there's going to be the loan documentation itself. Often that comes in two parts. It's one package, but often the lender will require a certain number of the pages for the closing to be scanned and sent to them for their review prior to releasing funds. So usually the attorney will do those documents first, and then the balance of the closing package second, so that while you're signing that second part of the package and everybody's exchanging keys and things of that nature, all of the final sign off from the bank around the funding can take place, and everybody can be made whole while you're at the same closing table. At least that's how we do it in Georgia. Again, if you're in an escrow state, it might be separate. You may not even attend the closing. Certainly you may not attend it together. Typically in Georgia, we're all at the table together. And all of the funds are dispersed and handled at the while everybody is still there. So typically once that takes place, the keys are exchanged, and any garage clickers, things of that nature, or access, cards and key fobs, etc., all get exchanged at the closing table. If you're in an escrow state and that's happening in a disjointed way, just make sure the agents are coordinating how that exchange is taking place to make sure that everybody gets the access they need when they need it. If somebody is staying in a property, if a seller is staying in a property for a couple days or a period of time after the closing, make sure that that's documented up front as a part of the contract, and that appropriate protections are in place in the contract to govern that surviving the sale, and to make sure that the buyer is protected if anything happens, either in terms of damage or in terms of difficulty getting the owner out after the closing takes place. There are provisions for all of that, at least in our contracts, and there certainly can be if your contracts don't cover that by default. But you want to make sure that all of that is well spelled out and that you're protected in advance. Now that the closing is complete, this is where kind of things formally end in terms of defined relationship. But again, for us, we typically stay with our clients through the life of their ownership. So if you need help with movers or utilities, or you need help with maintenance workers, contractors, electricians, plumbers, home improvement specialists, etc., even architects or builders for expansions, we typically work with our owners through the life of their ownership. And we also tend to keep on file all of the documents that we have as a part of the transaction. So often clients will ask us, a year or two down the road for documentation they need for tax purposes or for some other reason. So you do want to try to keep your documentation in a safe place. In particular, you want to keep your title insurance in a safe place, as well as your recorded warranty deed. Those are documents that your agent probably is not going to get a copy of, so they're not going to have the ability to provide that as a resource for you. If you scan them and send them to us, we will keep them on file, but we don't get those as a part of the closing process, so we don't by default have those to keep on file for you. And then as you look at maintaining your home, expectations over the next couple of years, you're going to want to refer back to your home inspection report. That should have told you not just what was wrong, but what's likely to come up in the near future in terms of things that need to be maintained on the home. And you want to make sure that you're budgeting for those so that you're in a solid financial position when those repairs or improvements need to take place. And again, we tend to work with our clients in terms of resources for that, but we want them to be prepared financially so that they're in a solid place when that comes to when that need arises. And if we had discovered early on in the process, and this is something we do discuss with pretty much all of our buyers, if you are maxing yourself out financially with a purchase, or liquidating most of your cash in order to, or you utilizing most of your cash in order to close on a property. It may be appropriate to do a home warranty that either the buyer or the seller pays for. That part is relatively nominal. It's not the most important piece, but it would protect you in terms of most significant events that would happen during the first 12 to 18 months of the ownership, and you can extend them beyond their initial term typically. But that would typically have a small deductible, but would cover things like an HVAC system breaking, or a water leak happening in a roof, or a plumbing pipe bursting, or not bursting like from the cold, but breaking from a defective perspective. So there are different things that can be covered as a part of a home warranty, and if that is something that needed to exist or does exist as a part of your purchase, then keeping that paperwork handy as well as a part of your accessible documentation and familiarizing yourself with that process will help you position yourself well for maintaining and kind of going into the initial ownership process with their home. And then the other thing I tell people to do is to keep or create like a capital improvements budget. So the easiest way to think about this, if you've lived in something like a condo, it's easy to understand because as part of your HOA dues are typically for things like preemptively budgeting for like a roof replacement, or painting the hallways, or carpet replacement, or whatever the case may be. The same thing really is true of a home. Those needs obviously arise over time, and so if you can set aside money in advance, then you're well positioned to keep the house maintained properly and or keep it renovated properly. And the budget is going to vary on that a little bit based on the age of the home. If you've got a home that's more than 10 or 12 years old, the easiest way to think of it is roughly 1% of the property's value on an annual basis gets set aside. So if you're in a $500,000 house, roughly $5,000 is going to get aside on an annual basis to do things like replace the roof or the HVAC system, or to paint the exterior, or to update a bathroom, etc., as things arise. And you can, from the inspection report, based on the expected life of things and or age of things, you can kind of set down and order what you think is likely to happen. It won't necessarily happen exactly in that order, but as you start to spend your capital budget, you can look at that expenditure relative to the expectation and make sure you're not spending money for something nicer to have than something that is going to be need to have. So as an example, you don't want to be renovating your kitchen if next year you're going to need to replace your roof and you're not going to have enough budget replenished in order to do that. So just keep that in mind as you look at those types of expenses and budgeting in your process. And then the other thing on improvements in particular is understanding how they're likely to play in the marketplace. So looking at your time horizon in the property, how much longer you intend to be there, and how much enjoyment you're going to get out of the improvement that you're making relative to how it's going to position the home for resale down the road. So again, for us, we tend to just talk to our clients on a periodic basis and make sure that as they're looking at those kinds of projects, that they're being mindful of how much value they're likely to get out of that when they go to resell. Doesn't mean they have to make the decision that's most in line with what the market expectation is. It just means that we want them to be well informed so that as they make decisions, they know if they are or are not going to get that value back as they position for sale down the road. And that's kind of the end of the overview of what our home buyers process looks like. It's a fairly lengthy overview, obviously. I mean, it's probably going to be a little over an hour long if you go through all of that in one sitting. We have a document that is a part of the process separate from the video series that we've just put together, but it's really helpful if you have a comprehensive expectation of the process and you kind of sort of know where you are as you go through the home buying or home selling process. So hopefully this is helpful to you in terms of Hopefully it's helpful to you to have this guide and to understand what it is that should happen as a part of the home buying process. Hopefully it helps you understand what expectations you should have of your agent and of the other members of the team that are going to be required to get you to a successful completion and to position you well to really enjoy your home ownership, not just of the house, but to enjoy the neighborhood, the community, to be well positioned financially, both in terms of affordability and in terms of resale value and financial performance down the road. We look forward to the opportunity to work with you if you're in our metro market, and we certainly wish you the best if you're in another market around the country.